And we'll start this one. All right. So for chapter 10, we're talking about protecting our revenue systems or the things we have in place to ensure that our revenue is protected. And what is revenue? Not profit. Our revenue is profit is related to our revenue, but it's not the same thing. It's the total sales. It's all the money that we brought in, right? So that revenue, if we remember way back when, we have profit or loss is equal to our revenue minus our expenses. Or we could also say sales minus costs. Okay. And so this revenue, we've talked pretty much the whole semester about conserving our costs, right? How can we control how we're spending money? But we also have to take into account we have to protect our revenue, because if we don't protect our revenue, then if this number is lower and our expenses stay the same, well, then we're still going to be losing money. We're not going to have as much of a profit. Okay. And so today we're in chapter 10. We're going to talk a little bit about the revenue process and ways that we can protect. Okay. So the first thing we want to do is we want to verify what was actually sold. Okay. So the 4 steps we're going to go through: verifying our product sales. We're going to verify the guests were charged correctly. We're going to verify the payment was made. And then we're going to verify the deposits that actually go into the bank. Okay. And so when we verify the product sales, the first thing we want to look at is, what did the kitchen issue? I think if we look back at, I believe it was chapter 8, 7 or 8, where we were talking about the issues of what was the amount of product that was prepared, and then how much was served, and then how much was put back into inventory. And that is the first table on your notes page. There's nothing really anything for you to fill out for this one. It's just there for you to see. So if we take a look at that filet mignon, for example, we issued 50, we returned 5, and that means if we had 45 total repaired or prepared, then in that case, everything's going to line up correctly. Okay. Then we compare what was issued to our guest checks. So what does the servers say? What does the servers report say? Okay. And so if we take a look, I don't have a pen on me today. If we take a look down at the variance, we want to take the information from the top 2 tables. Okay. So this tells me that my actual is 44. So you see where my server reports say I served 44 filet mignons. Everyone put your finger right there where it says 44 filet mignons were served. Okay, so we put in the actual 44. And then we minus the prepared is 45. And what is the difference? 44 minus 45 is, say it loud and proud, -1. Okay, I know it's before 8:30, so that's as loud as you can be. I'll accept that. Okay, so -1. Now, how about the grilled salmon? We had 22, and we prepared 22. It's 0. New York strip, we served 32. We prepared 34. So our variance is -2, okay? And then pasta primavera, 11 and 11 is 0. So which 2 items have a negative variance? The filet mignon and not the salmon, the New York strip. Okay. So our two steaks have a negative variance. What is the issue with having a negative variance? We are losing money. Okay. So that means a steak went out of the kitchen. We prepared a steak and it was served, but there was no ticket for it. If there's no ticket, then I didn't charge a guest for that. So, bless you. If my filet mignon is $45, that means I did not get $45 in revenue, but it still cost me money because that steak cost, that ingredient cost money, right? And so I'm not protecting the revenue coming in, but my costs are going out. Does that make sense? Okay. So what could be a reason why we have a negative variance on the steak? Any thoughts? Yeah, so if we have to remake it or we have to refire let's say the steak came out cooked incorrectly, okay, even though I have to remake that steak, I need to ring that in again so my inventory matches. Okay, so that filet mignon, maybe somebody had it remade. They have to ring that into the system again. I'm probably going to comp it off. I'm probably going to take it off, so I'm still going to be losing the money, but at least I'm tracking my inventory so I know where the issues are. And if I notice that David has at least one filet mignon every shift that is being remade, then I need to have a conversation with David to say, why are we missing? Why are you making this? Why does this mistake keep happening over and over again? Okay. So as a manager, you have to investigate. Is it the server's fault? Is it the kitchen's fault? Okay. It's not always the kitchen's fault. And if you're back at the house, it's not always the server's fault. Okay. Somebody is to blame, but we have to figure out who that person is. Okay. So you want to verify that everyone has been charged correctly. Okay. Everything has been served and charged correctly. Then we also want to make sure that we verify that everybody is charged the correct amount. Okay. So, what are some concerns with overcharging a guest? Okay, so this guest satisfaction is impacted. When would we potentially, I know we would never do this, but when would we potentially overcharge a guest? Or how could that happen? Yeah, it would be by accident for sure. Hopefully it'd be by accident. Okay, yeah. So maybe they came in and they had a coupon of some sort, but you didn't apply the discount. That's a very good example. And so if they go in thinking it's how many of you have been in the situation where you go in thinking it's going to cost this much because you have a coupon or you have some kind of, benefit or whatnot, and then it ends up being more than what you thought it was going to be. How many of you would say something? Okay. How many of you just would not go back? Okay, that's usually what happens. People are they're gonna not say anything there, and then as soon as they get home, they're gonna write a review on Facebook or they're gonna write a review on TripAdvisor or Google, and then you have to deal with it there. And so overcharging a guest, your reputation, the can be impacted, the guest satisfaction can be impacted. Okay. So I had an example. There's a chicken restaurant up in the Denton area. I went up there while I was in school at North Texas, and I can't remember if I told y'all this or not, but I went in and the meal was like $10, right? You got the chicken, the rice, and then the drink, the whole thing, right? And then when they rang up my order, it came out to like $12, and I was like, man, that's a lot of money for like taxes. I was like, that's two whole dollars, like 20% taxes. That's kind of crazy. And so then I looked at my receipt and I saw that the cashier had charged me to upgrade my soda to a large drink. But she never asked me to upgrade if I wanted to upgrade to a large drink. She just charged me 25 cents. Right. And so at first I was just like, I'm not going to say anything. It's 25 cents. It's a quarter. It's no big deal, whatever. And then as I was waiting for my food, I looked around in the entire restaurant, and guess what? Everybody had a large drink. And I started thinking, I was like, I wonder if all those people realized that they were either asked, were they asked, or did they even realize that they were charged for a large drink? So I went to the cashier and I said, I'm just wondering. I waited till there was nobody in line. I went back up and I was like, hey, I just wanted to know if it was company policy to overcharge your guests for things they didn't ask for. And she's like, what do you mean? I said, well, you charged me for a large soda. I didn't want a large soda and you didn't ask me. And she's like, well, do you want your money back? And I was like, yeah, sure. Take my money back. So she opened her cash drawer, gave me a quarter. And then in my mind, I was like, well, technically it's 27 cents if you add tax, but I'm not going to worry about the 2 pennies. So yeah, I do. I've never been back to that restaurant and I will never go back to that restaurant. It's a chain restaurant and I know it's stupid over 25 cents, but it's more about the principle. That one employee has impacted somebody's willingness to go back to that restaurant as a chain anywhere for 25 cents. So you lose a lifetime guest at the risk of doing something like that. So overcharging is not, I don't know what happened to my screen here. Overcharging is not something that can definitely impact. Now, what about undercharging? What could be some issues with undercharging a guest? Definitely the restaurant's going to lose money. What else? It messes up your inventory. Absolutely. So if we have, let's say, French fries and onion rings are typically a little bit more expensive. If a guest orders onion rings and the cashier charges them for French fries, that's undercharging. Okay. But it also messes up our inventory. So now we think that we should have this number of onion rings. Instead, we actually have less, right? If we go back to that example of the variance of the filet mignon in the New York strip, maybe the New York strip that is -2, maybe the server rang it in and realized it. And rather than going to the manager to say, hey, I need you to cancel one out and add the other, they just ran to the kitchens like, hey, that New York strip is actually a filet mignon. Can you just flip it out for me? Right. And so in that case, our revenue is going to be off, our inventory is going to be off, and that causes a lot of issues. Okay. What are some things from the guest perspective that could cause issues for undercharging a guest? Yeah. So the next time they come back, they order the exact same thing. And if it costs more that next time, they're gonna be like, well, wait a minute, I was just here 2 days ago and I paid this amount. And now you're telling me 2 days later it costs more. So it causes some concerns. If you don't think that people notice or are going to notice, I encourage you to join the San Antonio Restaurant Facebook group, because there are people that will notice when their check is 4 cents higher than the last time they went, and they will be more than happy to go to the San Antonio Restaurant Facebook group and try to get validation from everybody else on the group. So it does happen. People are very concerned about that. Um, so, and if you think about too, like, I don't know when this changed. It used to be that about 10 to 15 years ago, it used to be that restaurants could not pass on, under the Texas state law, restaurants could not pass on credit card fees onto their customers. Um, and so I don't know when that changed, but there was a change recently where now restaurants can add like a 4% service fee, which is essentially the credit card processing fee. But if you pay by cash, then they don't charge you that fee because there's no fee that they incur, right? And so then that's a whole other discussion that happened this weekend on San Antonio Restaurant Facebook group, because they think that everybody should be charged that, and only if not if you're paying cash. I don't know. There's a lot of people who know how to run restaurants that have never run a restaurant, apparently, in our city. Um, so we talked about charging the guests, verifying our payments. Okay. So once we look at taking credit card payments, okay, once we settle up at the end of the night, our credit card payments go into accounts payable. No, sorry, accounts receivable. Okay. What's the root word of receivable? Receive. Okay. This is money that is coming into us. So when that credit card at the end of the night, end of the shift, when we post that, we basically send that information to the credit card company, and then we are going to expect a transfer into our bank account from that credit card company. Probably minus the fees, not probably, definitely minus the fees, right? They're going to take their percentage off, and then they're going to return the accounts receivable. That's money that's owed to us. We don't have it immediately, okay? And so at the end of the night, we want to make sure that we post and we settle all of those credit card payments. Okay. If it is money, this is not necessarily related to chapter 10, but if we have accounts payable, what is that? If accounts receivable is money owed to us, what is accounts payable? Money we owe. So things like to our vendors for our ingredients. Okay. Accounts payable, that is all money that's going to be going out. So if you ever take an accounting class, this is how we balance our accounts. We have accounts payable. This is money, all the money that we have, all the invoices we have to pay. Accounts receivable is the money that's going to be coming in and due to us. Okay. Um, and then we also want to look to see if there are any kinds of coupons that are collected. Okay. Those coupons are basically like payment. So if we have a special that's like buy one appetizer, get one free, we need to collect that physical coupon in order to process it with the payment for the server. Okay. Sometimes in hotels, we will see breakfast buffets or lunch buffets and things like that as part of a conference. So if we have a big group in house and they're all, because they're part of the group, they get a little coupon. We have to turn that coupon in, because then at the end of that time, we count all those coupons, and that's how we know how much to bill the customer for. All of those coupons basically count as money. So just like when a server, or just like turning in cash and all the credit card receipts, the servers also have to include any kind of coupons or any kind of other forms of payment, checks and things like that, in order to balance out and reconcile their shift report. Okay, so that's one way that we're going to be looking at verifying the payment. Any questions about verifying payment? And then the last thing is our deposits. Okay. So we're probably going to have some kind of a deposit form that has to be counted and signed by somebody to say this is what I'm verifying is in this deposit. Okay. One of the concepts we have before we jump into calculating the cost on our page, or our deposit, I'm sorry, is this concept of petty cash. Who has never heard of the concept of petty cash? Who has never heard of it? Okay. Who has heard of it but isn't sure what it is? Okay. Who's heard of it and knows what it is? Awesome. Okay. So a good mix. Petty cash. Okay. What does it sound like? Small amounts of cash. Exactly. It is a small amount of cash. Okay. It's a small amount of cash. It's basically used for emergencies. Okay. Depending on the restaurant, it's anywhere from 50 to 100, maybe $200, but it's not much comparatively. Okay. And so the way it works, it's used for emergencies. Let's say we ran out of ketchup. Okay. And I need to send Robbie to HEB to go and get 5 bottles of ketchup to get me through the rest of the shift. Right. I'm going to give Robbie $100. Maybe not $100. Let's give you $50. Okay. I'm going to give Robbie $50 for ketchup. And then he goes to HEB and he gets the 5 bottles of ketchup. And let's say they're $4 a piece. So five bottles times $4 each is how much? 20 bucks. Okay. And so Robbie is going to get change of $30. So when Robbie comes back to the restaurant, he's going to give me the $30 plus the $20 receipt. And this receipt right here is basically equal to cash. So when Robbie gives me back that $30 change and the $20 receipt, that's the $50 that I gave him. I'm going to put that $20 receipt into the petty cash drawer. So that accounts for that $20. And at the end of my shift, I'm probably going to take a little bit of cash from the cash drawer. And I'm going to take that $20 and make that petty cash whole again at $50 cash. Okay. But that receipt is going to track why that petty cash was used. It's also going to track the actual amount that was given. Okay. So the big thing with petty cash is when it is used, there also needs to be a receipt behind any kind of reason why that money was used. Okay. Because all the other ingredients, when I buy ketchup in a big case, my receipt is on my invoice. That keeps track of that. Okay. So petty cash. So in your own words, in that little sense, that little space right there, after that conversation about petty cash, in your own words, write what the purpose of petty cash is. I'll give you a moment. In your own words. All right. So then the next thing that we want to do when we're talking about protecting our revenue is we want to verify all of our server reports, any cashier reports, and then also ultimately go back and confirm the deposit. So when I was a server, TJ Fridays, Cheesecake Factory, okay, end of my shift was over, I would print a report. And so it'd have my name up here at the top. It would have total sales. It would have credit card sales. And it would have cash sales. Okay. So essentially, it would have all of the information. Then it would probably go in, depending on the place of business. Sometimes it will break it down to like appetizers, entrees, desserts. So we can easily see how much money in appetizers that I sell, entrees, desserts, etc. It may even go as far as listing all the different items that I sold. So how many times did I sell a New York strip? How many times did I sell a salmon, etc. Okay. It will also have no, that's not what I want. In addition to credit card sales, it's also going to have credit card tips. And then the amount due. Okay. And so what we're going to do is we're going to kind of look at that information from a server perspective to figure out how much is actually due for the server to make their deposit. So if we have total sales of $1,500 on your paper, we have total sales of $1,500. My credit card sales was $1,220. How much money do I owe to turn into my boss at the end of my shift? 280. We see everyone see how we get that? So when I turn in my big paper receipt right here, I'm going to turn that in with $280 in cash as my responsibility. And then depending on where you work, at TGI Fridays, we had to sit down with our manager and go over our deposits as servers. At Cheesecake Factory, there was way too many of us. And so we literally would just put it into a tube like you have at the bank, like a small little deposit tube with the exact amount of cash and drop it in. And then somebody would go and count that and verify it later. So it depends on where you work, on what the process is. But at TGI Fridays, my boss would literally sit with me and verify that they have exactly what they need from me. Okay. Depending on the place of business, oops, that should have been yellow. Erase. There we go. The credit card tips. Okay. With the credit card tips, oftentimes would then be subtracted from that $280. So I owe $280 in cash, right? Based on my sales. My credit card tips, let's say were $100. So I would subtract my credit card tips and I would turn in $100. Okay. $180. Just kidding. $180. So sometimes that's kind of how that process works. So when those tips go out on the credit cards, then they would owe that. They usually take it out of the cash that you owe back to them, so that way you have your credit card tips. Some businesses put it onto your check, onto your paycheck. They hold on to that, and then they hold on to the tips, and then they add them to your paycheck. Okay. What are some issues with doing that? What's that? It does get taxed. Yep, it does get taxed, right? So as a server, I don't know if anybody in here been a server before. Okay. So as a server, typically what's the process when you clock out? You have to do what? What's that? You should be reporting your cash tips, right? You should be reporting how much in tips you got during that shift. Okay. And then oftentimes when you get a paycheck, it's a void paycheck because the taxes on your tips is more than the $2.13 times the hours that you worked, right? And so I remember the first time I got a check that said zero or it said void, and I was like, "What do you mean I have no money?" Well, I walked out with all my money. Every single shift, I had money in my pocket. And so that's kind of as a company, sometimes I've seen this happen more regularly where they hold on to your credit card tips, they track those, and then just add it to your paycheck. It does get taxed. The other benefit from the employee's perspective, though, because I remember the first year I was a server, I had to pay my taxes that year. I owed like $1,000. Well, did I have $1,000? No, I didn't because I spent it all because I just had cash in my pocket all the time. And so, from a company's perspective, it kind of helps those servers because when it comes time to pay the taxes at the end of the year, then you've already paid the taxes on those tips. And so, there's really kind of a different school of thought on which way is best. Whatever you want to do, I mean, it's nice for your employees to walk out and have cash in their pockets. So, any questions about that? Comments, concerns? Guys are like, hurry up, Mr. Minsky. We have one more thing to do, and then we're done with the textbook for the whole semester. All right. So let me open up our worksheet so we can take a look at that. So, all right. So now, different from different from the server. I mean, the server is going to be pretty similar to this, but typically servers aren't using as much um, quantity of different items, different currencies and whatnot. So basically, the cashier's deposit slip is going to look a little bit more detailed. Okay. And so we want to multiply each one of these to get our totals. Okay. And then we're going to add them all up to get the total currency in coin. So I can give you a moment to do that. All right, did we get 2586.30? That's what I'm getting, but it doesn't seem right. 2604.30. So why am I missing? Ah, look at that. I was thinking I was doing pennies. All right. So we got the 2604.30. Okay. All right. So now we take into account our total sales of $5,830.35. Okay. Our credit card sales of $3,526.05. So if we take that into consideration, we subtract just like the server did, 5830.35 minus 3526.05 is $2,304.30. Okay. Now we take this cash in. I'm going to take this out, this less the bank out. So 2,604.30, we take out that cash bank, and what do we get? We do 2604.30 minus 300 is equal to what? 2304.30. And so my bank is 2304.30. So am I short or over or under? Or not at all? I'm exactly right. I'm not short. I'm not over. My deposit is exactly correct. Okay. So remember, we have to take into consideration the bank. This bank right here is part of this $2,600. So we subtract that, we get the 2304.30. Take out that 300. That makes and starts the bank for tomorrow. I take that out and I put it aside and I use that to start my bank for tomorrow. Okay. And then once this is deposited, once this is created, then we create the deposit form, put it all together, and then whoever the manager is takes it to the bank and makes that deposit at the bank. Okay. So protecting our revenue is just as important as protecting our costs and our expenses. I had a friend of mine who owned a catering company. He had a venue, and he had a wedding on a Saturday night. And the bride and groom paid the balance of $15,000 in cash that night of the wedding. And at the end of the night, he was really tired. It was a long day. And he thought, you know what? I'll just go and I'll deposit this Monday morning. Well, his catering company was broken into on Sunday night. And guess what they stole? $15,000 cash. So protecting your revenue, protecting your money is just as important because, again, if we think about our profit or loss is to our revenue minus our expenses. If now my revenue is $15,000 less because of that happening, then my profit and my loss is going to be impacted because my expenses still stay the same. I still had to serve the party. I still had to make all the food. I still had to pay the labor, but now my revenue is less. And then also looking at how we can protect our revenue in the sense of not undercharging, not overcharging our guests so they pay for exactly what they get, so that we keeps our guest satisfaction high and people want to keep coming back. All right. So that concludes chapter 10 from our textbook. So our textbook is officially done, which means The remainder of the semester, let's take a look at, we got a couple more things to talk about. But the remainder of the semester, like I already mentioned before, Wednesday this week will be a project work day. And then the same thing for the 4th and 6th, 18th and 20th, 25th, and 27th, your project is due. So let's take a look. I'm going to start a new video